True story, I once lost over $10,000 in a single day. Yes, it's because I picked a bad stock. And not because the market was rigged, but because I thought I was smarter than my stop loss. I averaged down. I didn't want to be wrong. I doubled down and the market humbled me. This episode could literally save your portfolio. It's not about charts. It's about your brain, your ego, and your rules. Amateurs focus on rewards. Professionals focus on risks. Paul Tudor Jones. Part 1. The real killer. Your emotions. Fear, greed, FOMO, fear of missing out, revenge trading. It's not what you trade. It's how you react when the trade goes against you. 90% of blown up accounts happen because of overtrading, no plan, and emotional decision making. Your brain is wired to avoid pain, not to make money. So it tells you to sell winners too early and hold losers too long. Part 2, Risk Management 101. If you forget everything else in the series, remember this: risk small to win big. Stay in a game long enough to get lucky. Here's the core formula. Number 1, never risk more than 1 to 2% of your account per trade. You got $1,000? Risk $10 to $20 per trade max. Use stop losses religiously. Set them before the trade, not after it turns red. Number 3, position sizing is greater than prediction. You don't need to predict perfectly if your risk is managed. Part 3, how the pros think about risk. Pros don't aim to win every trade. They aim to survive every trade. They take small losses quickly, let winners run with trailing stops. They're not emotional, they're mechanical. Examples: day trader takes 5 trades, loses on 3, profits on 2, but those 2 winners are bigger. Swing traders sets risk of $100 to potentially make $300 and above. Investors like me spreads risk across diversified positions, doesn't YOLO into one meme stock. Personally, as a long-term investor, I have various dividend stocks consisting of REITs and dividend aristocrats, stable companies, and then I have cash flowing real estate as the other part of my portfolio, and then I have precious metals. Part 4, trading psychology traps. The don'ts. Don't revenge trade after a loss. Don't double down on a loser. And don't break your rules because this one feels different. The do's. Do take breaks after big wins or losses. Do trade with a written plan. And do stick to your system even when tempted not to. The goal isn't to be right. The goal is to be profitable. You can be wrong 60% of the time and still make money if your risk and reward ratio is right. Part 5, daily risk routine checklist for viewers. Number 1, did I define risk before entering the trade? Number 2, am I risking more than 2% of my account? Number 3, do I know where I'm getting out, win or lose? And number 4, is this trade based on my plan or my feelings? This list is going to be downloadable in the descriptions below, so you can always look at it before you make a trade. Trading isn't about being fearless. It's about building systems that protect you from yourself. Master your mindset, respect the risk, and you won't just survive this game, you'll thrive in it. This is The Secret Sauce. For more investing, finance, real estate, and macroeconomics, let's all learn wealthy together. I'll see you in the next video.